Hey everybody, this is Brian Shannon from alphatrends.net. Hope you had good holidays, and of course we have a full day on Monday, half day on Tuesday of next week, and the market is closed again on Wednesday. So we are seeing a slowdown in trading, of course, and a little bit of a pullback here today. Nothing major, but we are lower for across the board, except for oil, which has been the weak group this year, down 2.5%. Let's take a look at these charts and make some sense of it. The S&P 500 on Thursday came right up to the declining 20-day moving average, as well as this prior band of support. And today we saw the gap lower and continuation down. Now, the good news is it came down right to where it was supposed to. That is the 5-day moving average, the anchor off of the recent low, and the anchor from the Fed. So this was what I had sketched out Thursday night as far as what I thought was a possibility for today. And that's something I share with subscribers to Alpha Trends as well as on Twitter each day. So where we are for next week, hopefully, is maybe we see some recovery like this and we can move back higher again and look to potentially take out this level. But again, we've got to be aware that right now we've been below declining 5-day moving average. That will change first thing Monday morning as we get rid of this data. And keep in mind, again, if you're looking at a 5-day moving average on a daily chart, you're not looking at a full 5 days of trading. The only way that it typically occurs is at the end of the 5th day. However, because of the holiday shortened week, we have 4.5 days is what you're actually looking at on that 5-day moving average. And then, of course, on Monday, you will see that first thing, the first 5 minutes of the day, that 5-day moving average will be 3.5 days plus 5 minutes. So you're always better off using an intraday. In fact, that's all I use. A 5-day moving average is on intraday, never on daily, and never an exponential moving average. There is zero advantage to that. In fact, it's a hindrance to performance based on the decades of using the 5-day moving average that I've had. Anyways, the S&P, if it's going to recover, it hopefully will do something like this, come back up, work through this little band of resistance here and then continue higher. Otherwise, if we see some weakness, then we get stuck below a 5-day moving average. Then you've got to look for bigger levels to the downside to be tested, such as the anchor off of the September low again, or perhaps even if it goes deeper than that, perhaps into the beginning of the new year, that we see it down into this 570-ish level. We've had a great year of gains. In fact, let's take a look at that again. S&P up 25% after a similar move last year. Semis up 42%. So just a real big move across the board. And it wouldn't be surprising to see some deeper pullbacks in January to kind of reset the stage for 2025 and then more return to normalized trading. For the NASDAQ, we have the potential that our pattern of higher highs and higher lows is being broken. Now, all we have so far is a small lower high. So that this high right here, we have a lower high. We don't have a lower low. And in fact, if we were to break below this, let's say on Monday, that wouldn't get me bearish. What would get me near term a little bit more bearish is if we did this and then continued lower. So you can't sell short basically on a break of this low. You can, but it would be extended down in that area. We're simply cautious right now. We've got a rising 20-day moving average. We've got a rising 50. We've got a rising 200-day moving average. We're above all the key anchors, including the anchor from the election, which on the 30-minute time frame here on the right is this black one right here. So that's going to be an important level to be defended. If we kind of do something like this and break down, well, I wouldn't be surprised at all to see this 500 level tested. And that's, again, just something to be aware of. Take each stock based on its own merits. And looking at the Russell 2000, we continue to see a declining 5-day moving average, and we are below declining 20 and 50-day moving average. We're kind of stuck at the anchor from the August low, and it wouldn't surprise me at all to see this market drop down towards this 215 level where we have the anchor off of the April low, April low and the 200-day moving average. So that wouldn't surprise me at all. The trend is lower here. If you were trading it for a bounce, you should have been stopped out, I believe, right here as it broke this higher low. So if you're, again, you've got to look at your definition of trend for what you're trying to accomplish and realize your likelihood of gains continuing to the upside are diminished when you have a declining 5-day moving average. So don't get fooled by these rallies with declining moving averages. Semiconductors, this is what I was looking at here, is that, the pattern of higher highs and these higher lows was interrupted first thing this morning, and that was the cue to get out of intermediate term uptrends if you were involved in it. We are still realistically just in this range-bound choppy action for the SMH, so there's really no big advantage to being involved here. This is kind of the bulk of the range, and of course we had these two little outliers here, but it's just mixed messages. And when the messages are mixed, then the message is clear. It means stand on the sidelines, switch to a shorter term time frame for clarity, or just leave them alone, find something else to trade. Biotechs, these guys rallied right up to this prior little low, and that prior bounce support then became resistance here today. Again, it shouldn't be a surprise with the market below a declining 20, 50, 200-day moving average, year-to-date anchor. The trend is lower in the biotechs, and if you're going to trade these bounces, be quick with them is the message of the market. Financial stocks still undergoing some profit taking here. This is what I had sketched in as far as a possibility is that we would rally up towards the anchor from the election and the 20-day moving average. This still looks distributional to me, and perhaps we see a deeper pullback like that early in the new year. It's been holding the anchor off of the September low. If that fails to hold and really gives way, then I think you've got a quick trip down to the anchor off of this low, which would bring you in towards 47. And as far as energy goes, they're trying to find some stability in here. They got a little bit of a bounce here this morning, but that quickly failed, as I mentioned to subscribers and the Alpha Trends Twitter, that if they were going to trade this, and if they had been long in the morning, that the stop should go under here. You've got to be quick with these. If you're looking for a bottom, you've got to look at it and say, okay, we saw this as a low this morning that we bounced from. We broke a lower low, and then it basically gave up the gains for the day, closing down 1 penny. So you've got to be quick in these things. They're not going to just quickly turn around, I don't think. And, the difference between this move over here and this move is we saw a rapid V-shaped turnaround. The more time it spends down here, it says that there's still sellers in this area, and it lessens the likelihood of a sharper bounce, certainly, and even a bounce at all. So the good news is we're holding at that rising 5-day moving average, the anchor off of the Federal Reserve right here, and the anchor off of the recent low. So if somehow maybe we see a little shakeout and then it starts to do this, perhaps you could be a buyer there with a stop under here. But again, you've got to remember we're below declining 20, 50, and 200-day moving average. The path of least resistance on the daily time frame is lower. When we look at the weekly time frame, we've broken this longer-term trend line, and this could be just a large stage 3 distribution here that could be leading towards the next major decline. Don't think that these energy names are down too much just because they're down a lot. Maybe we see something like this and continue to distribute into next year and then break down. Certainly a lot of the individual energy stocks, Warren Buffett's in particular, has been in a downtrend, and it got a bounce here this past week, but where did it bounce to? Right up to the anchor from the election. We've got a declining 20-day moving average, declining 50-day moving average. You look at that weekly time frame, it's still in a major downtrend, and if they don't scare you out, they will typically wear you out. Let's take a look at NVIDIA. We bounced up to the conjunction of the anchor off of the election. That's the orange one, of course, and that 20 and 50-day moving average right in here. So it shouldn't really be a surprise that after a rally of this type of magnitude, that it ran straight. You have to ask yourself, where has it come from? Well, it rallied from 126 up to 140. Where did it have the potential to go before it was likely to encounter a source of supply that might become resistance? And that was basically right here at the anchor from the election in the 50-day moving average. Next week, as we average this data out of the 20-day moving average, if we are, unless we're rallying in this, well, then the 20-day moving average is going to start to roll over like this. So keep that in mind. We will have a declining 20 below a declining 50, and that might pave the way for a deeper correction in NVIDIA. Right now on this daily time frame, you cannot deny the pattern here is so far lower highs and lower lows. We have this lower high, this lower high, this low, a lower low. And if we see another lower low, it's likely, I think, to come down to that 200-day moving average. So did we talk about Bitcoin? We did not. So let's talk about this. This orange anchor, of course, is from the election. And we've seen so far that first test was a very nice bounce. The second one, we got a better bounce than I expected, but it rallied right up to where it was supposed to find supply, just underneath that round number of 100,000 and the anchor off of these three peaks. So we look at this now, and the way I'm seeing it is the more times its support is tested, the more likely it is to fail to hold. And we have this high, and we now have a lower high as well. So if we break below here, it wouldn't surprise me at all to see a move perhaps down towards the anchor off of this low. And then if that wasn't to hold in that area, then perhaps we continue down to some of these other ones. Bitcoin has had a big rally. I mean, it doubled in the last 3 months. It's time to maybe digest these gains a little bit. Make sure you're playing defense in here and you're not just blinded by these ridiculous upside price targets. And when I say ridiculous price targets, I'm not making fun of anyone there, but you know, it's had a good run already. It just doubled. For people to be saying, hey, it's going to 250,000 on this cycle, maybe it does, but it's going to need a deeper pullback in here to digest these gains. And that'll do it. Have a good weekend.